Welcome to this advanced trading talk where I explain options Greeks in simple English. Whether you trade stocks, crypto, futures or commodities, learning Greeks can sharpen your decisions and improve risk control. What are options Greeks? Options Greeks are numbers delta, gamma, theta and vega that tell you how an options price changes in response to new market conditions. They offer insight into risk and value beyond price alone. First one is delta. Delta is price sensitivity. Delta measures how much an option price moves when the underlying asset moves by 1 rupee or $1. I think you understand. Spot Nifty is underlying asset. Nifty feature is future. And Nifty call option is option. The delta is price sensitivity. This measures how much an option price moves when the underlying asset moves by 1 rupee or $1. If delta is 0.5 and the stock rises by $1 or 1 rupee or 10 rupees, the options price goes up by about 50 cents. I hope you understand. If delta is 0.5 and the stock price rises by $1, the options price goes up by about 50 cents. For crypto, it works the same way. Delta helps you estimate profit or loss directionally. In simple words, delta is measures how much the option price moves when the underlying asset moves by some amount of money. If you have any doubts, please post your comment or doubt in comment section. Next one is gamma. Delta's rate of change. Gamma is delta's rate of change. Just before we have discussed about delta. Gamma is delta's rate of change. Gamma shows how delta itself changes when the underlying price moves. High gamma means delta moves quickly. Great for big jumps but risky if price turns against you. Gamma is highest near the strike price and for short expiries. Please listen once again. Gamma is delta's rate of change. Gamma shows how delta itself changes when the underlying moves. High gamma means delta moves quickly. It is great for big jumps but risky if price turns against you. Gamma is highest near the strike price and for short expiries. Next one is theta. Theta is time decay. Particularly, I suggest you please learn about time decay if you are an option trader. Theta measures how much an option's value erodes as time passes. For example, if theta is 0.1, the option loses 10 paisa or 10 cents per day if all else stays the same. Time decay is a silent profit for sellers and a cost for buyers. Listen once again. Theta is time decay. Theta measures how much an option's value erodes as time passes. For example, if theta is 0.1, the option loses 10 paisa or 10 cents per day if all else stays the same. Time decay is a silent profit for sellers and a cost for buyers. Once again, I am telling, please type time decay in Google search and learn it. Without knowing about time decay, option trading may not give you fruitful trading results. I suggest you please learn about option Greeks, particularly in time decay. Next one is Vega. Vega is volatility sensitivity. Vega tells you how much the option price changes when implied volatility shifts. Please listen my previous video about volatility, particularly implied volatility. If Vega is 0.2, a 1% rise in volatility adds 20 paisa or 20 cents to the option price. Once again, Vega is volatility sensitivity. Vega tells you how much the option price changes when implied volatility shifts. If Vega is 0.2, a 1% rise in volatility adds 20 paisa or 20 cents to the option price. Volatility impacts everything from crypto rallies to earning events. Applying Greeks in stocks, futures, and crypto. In stock trading, use delta and theta to pick the right call or put, depending on bullish or bearish views. Once again, stock trading, use delta and theta to pick the right call option or put option, depending on bullish or bearish views. In futures and options, for commodities or currencies, monitor Vega and Gamma around macro events or seasonal volatility. In crypto, volatility is huge in crypto. Vega matters a lot. Combine Gamma and Vega to take advantage of rapid price swings. Next one is risk management using Greeks. Delta neutral. Combine positions so your portfolio has net zero delta, less exposure to directional movements. Once again, delta neutral. Combine positions so your portfolio has net zero delta, less exposure to directional movements. Next one is gamma scalping. Keep trading small moves to profit from changing delta, not blind scalping. I'm talking about gamma scalping. Keep trading small moves to profit from changing delta. Next one is volatility play. Use high Vega options when implied volatility is low. Use high Vega options when implied volatility is low. Benefit if it increases. Real world example. Stock trade with the Greeks. Imagine you are bullish on a stock trading at rupees 200. You buy a 210 call option with a delta 0.4, gamma 0.05, theta 0.02, Vega 0.15. If stock moves to 202, that is 202 rupees, your option price rises by approximately 80 paisa. As it nears 210, gamma increases, boosting your directional exposure. Beware of theta. You lose value if price stays flat for days. Note once again. Beware of theta. You lose value if price stays flat for days. If implied volatility jumps, your option gains via Vega. Example: crypto options. Trade. Suppose Ethereum trades at $2,000. You buy a call option at $2,100 strike price. Volatility is low. Delta 0.3, Vega 0.25, Theta 0.05. If Ethereum rallies or volatility spikes before expiry, that Vega adds real value even if price does not move too fast. Combining Greeks in multi-leg trades, spreads and butterflies. Lower Vega, reduced theta, be more delta and gamma balanced. Straddles, strangles. High Vega exposure, low directional delta, profit based on volatility change. Greek's calendar. What changes over time? Theta accelerates as expiry nears. Gamma peaks close to expiry and at the money absent. Vega declines over time as expiration approaches. Watch these curves to time entries and exits. Common mistakes and how to avoid them. Ignoring theta. Long options lose value every day. Chasing gamma. High gamma near expiry is volatile. Manage carefully. Underestimating Vega. Volatility crush can wipe gains fast. Not adjusting trades. Greeks change as markets move. Monitor daily. Pro tips for advanced traders. Use tools that show real-time Greeks per position. Balance your portfolio's delta exposure by mixing long, short in different strike prices. Avoid holding long calls or puts into expiry unless you expect a big move. Monitor implied volatility skew across strikes. Identify relative cheapness of options. Summary and takeaways. Greeks are powerful tools to quantify option risk and value. Delta equal to directional, gamma equal to convexity, theta equal to time decay, Vega equal to volatility. Use Greeks to build smarter, balanced trades across stocks, futures, commodities, currencies, and crypto. Manage risk actively. Monitor Greek exposure as markets evolve. Dear friends, if you found this helpful or if you found this is confusing, please post your comments. Let's discuss. I am also a learner in these topics. So, no, actually, I want to learn more from everyone. So, if you have any doubts, please post your comments and suggestions and doubts. Let's discuss. One second. Example. In our example in option Greeks in action. Let's say a trader buys a call option on a stock or crypto token like Ethereum. It is currently trading at 1000 rupees. Option type is call option. Strike price 1050 rupees. Premium paid 30 rupees. Days to expiry 15 days. Implied volatility is 30%. Option Greeks at entry delta equal to 0.4, gamma equal to 0.05, theta equal to minus 2.5, Vega equal to 0.1. Let's see the results. Scenario 1. Stock price moves up by 10 rupees. New stock price is 1010 rupees. Delta equal to 0.4. So the option price increases by 10 rupees into 0.4 equal to 4 rupees. New option price equal to 30 rupees plus above 4 rupees equal to 34 rupees. Please listen once again to clear. But delta also changes due to gamma. Gamma equal to 0.05. So new delta becomes 0.4 plus 10 rupees into 0.05% equal to 90 paisa. 0.90. So for the next move, the option will gain faster. Next scenario, one day passes in the same option. One day passes, stock price unchanged. Theta is minus 2.5, meaning the option losses 2.5 rupees per day. New option price equal to 30 rupees minus 2.5 equal to 27 rupees 50 paisa. Even if the stock does not move, the value drops. This is time decay. Once again, I am telling about time decay. In this example, that is, in the second scenario, one day passes, stock price unchanged. Theta is minus 2.5, meaning the option losses 2.5 rupees per day. New option price equal to 30 rupees minus 2.5 equal to 27 rupees 50 paisa. Even if the stock price does not move, the value drops. Once again, even if the stock does not move, the value drops. This is called time decay. Next scenario, volatility increases by 5%. Vega equal to 0.1. So, for every 1% change in implied volatility, the option gains 10 paisa or 10 cents. If implied volatility jumps from 30% to 35%, the gain is 5 into 0.1 equal to 50 paisa. New option price is 30 rupees plus 50 paisa equal to 30 rupees 50 paisa. Volatility helps increase the premium even if the stock does not move. Combined scenario. Let's say stock moves up 10 rupees. One day passes, volatility increases 5%. Option price impact from delta plus 4 rupees, from theta minus 2.5 rupees, from Vega plus 50 cents. Net gain equal to 4 rupees minus 2.5 plus 0.5 equal to 2 rupees. New option price equal to 30 rupees plus 2 rupees equal to 32 rupees. Once again, listen to these examples to learn carefully. Finally, Greek meaning impact in this example. Delta price change sensitivity, option gained 4 rupees as stock moved 10 rupees. Gamma change in delta. Delta increased as stock moved up. Theta time decay loss 2.5 in value in one day. Vega volatility sensitivity gained 50 paisa from volatility spike. Once again, I am telling this video is not explaining the complex concepts of option Greeks. I am giving an introduction and a bird's eye view to you. Without having any knowledge of option Greeks, the trading will not gain any fruitful results. So, particularly for option traders, this is must to learn about option Greeks. This is the purpose of this video. If you have any doubts, any suggestions, any comments, please post everything in comment section. Let's discuss. Once again, I thank you.